Hey everyone, welcome back to Corporate Decoder. Today, Davis Fundamental ETF Trust just filed its N-CSR report for April 2026, and I am seeing some really interesting trends in their fund performance. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big story here is how these ETFs are performing against their benchmarks, and there are some notable differences to unpack. Alright, so we're diving into the latest report from Davis Fundamental ETF Trust. This filing, an N-CSR, is essentially a shareholder report for registered investment companies. It gives us a detailed look at how their various exchange-traded funds, or ETFs, are doing. We have four main funds here: Davis Select U.S. Equity ETF, Davis Select Financial ETF, Davis Select Worldwide ETF, and Davis Select International ETF. This report covers the period up to the 30th of April 2026, which is the end of their reporting period. Let's start by looking at expenses. For a hypothetical $10,000 investment in the Davis Select US Equity ETF, the costs for the last 6 months were around $32. This translates to about 0.59% annualized. For the Davis Select Financial ETF, it was $31, also around 0.60% annualized. The Davis Select Worldwide ETF came in at $32 for 6 months, or 0.64% annualized. And the Davis Select International ETF had costs of $33 for 6 months, or 0.66% annualized. These are fairly standard expense ratios, meaning the fees charged to manage the money. Now, onto the performance. Many investors look at these reports to see how the fund managers are navigating the market. For the Davis Select US Equity ETF, the report states it outperformed the Standard & Poor's 500 index, often called the S&P 500. The fund delivered a total return of 16.37%, while the S&P 500 returned 6.03% for the period. This fund focuses on large companies, generally those with a market value of at least $10 billion. It is also described as non-diversified, meaning it can put a significant chunk of its money into fewer companies, which can lead to higher returns but also higher risk. A big area of investment for this fund remains financial services companies. Looking at sector performance, energy, materials, and communication services were the strongest performers in the S&P 500. The weakest were consumer discretionary and financials, which were flat, and information technology with only a 2% return. The report highlights that information technology was a strong contributor for the US equity ETF, significantly outperforming the index sector. Holdings like Texas Instruments and Applied Materials did really well. Healthcare also did well, with Viatris being a notable performer. Consumer discretionary saw strengths in MGM resorts and restaurant brands. Energy was another strong point, with Coterra Energy being the largest individual contributor. However, there were detractors. Communication services underperformed, with Pinterest and Meta platforms being mentioned. Financials also underperformed the index sector, which is interesting because the fund has a significant overweight in this sector. Companies like Capital One, Financial Markle Group, Wells Fargo, and Berkshire Hathaway are listed as detractors here. Let's look at the official performance numbers for the 1-year period ending the 30th of April 2026. The Davis Select US Equity ETF had a return of 33.06%. The S&P 500 had 31.05% over 5 years. The ETF returned 10.91% versus the S&P 500's 13.13%. Since its inception in January 2017, the ETF has returned 12.98% annually, while the S&P 500 has returned 15.09%. So, while it beat the S&P 500 in the most recent period, its longer-term performance has lagged behind the index. As of the 30th of April 2026, the fund held 29 stocks, with net assets totaling $1.2 billion. The portfolio turnover rate was a low 1%, indicating the managers aren't buying and selling a lot of stocks frequently. The top sector was financials at 23.08%, followed by healthcare at 16.43%. Moving on to the Davis Select Financial ETF. This fund aims to invest at least 80% of its assets in companies within the financial services sector. It also stated it outperformed its benchmark, the S&P 500 Financials Index, with a return of 7.40% compared to the index's 0.47%. It also beat the broader S&P 500's return of 6.03%. This fund has a significant portion invested in foreign companies. For this fund, banks were a strong contributor, outperforming the industry average, with holdings like US Bancorp and Fifth Third Bancorp doing well. Capital markets also performed strongly. On the flip side, consumer finance was a detractor, with Capital One Financial being the largest individual detractor. It's interesting to see that despite being a detractor, the fund maintained an overweight position in this area. Looking at the performance table for the Davis Select Financial ETF, its one-year return was 24.04% versus the S&P 500's 31.05%. Over 5 years, it returned 12.05% against the S&P 500's 13.13%. Since inception in January 2017, it's returned 11.95% annually. While the S&P 500 has returned 15.09%, this fund has also lagged the broader S&P 500 in longer terms. This fund had net assets of $469.3 million as of the 30th of April 2026, with 34 holdings. Its portfolio turnover rate was 4%, and advisory fees paid were $1.1 million. The top industry was banks at 39.74%, followed by insurance at 19.09%. Next, the Davis Select Worldwide ETF. This fund invests in both US and foreign companies. For the period, it underperformed its benchmark, the MSCI ACWI, which is the Morgan Stanley Capital International All-Country World Index. The fund returned 4.62%, while the MSCI ACWI returned 7.75%. This fund invests across companies of all sizes. Industrials were a significant detractor, underperforming the index sector. China holdings also underperformed their index exposure, and the fund had an overweight in this area. Consumer discretionary also underperformed. On the contributor side, information technology significantly outperformed the index sector, with Samsung Electronics being the largest individual contributor. Healthcare and energy also performed well. The one-year return for the Davis Select Worldwide ETF was 27.47%, trailing the MSCI ACWI's 31.00%. Over 5 years, it returned 6.87% against the MSCI ACWI's 10.67%. Since inception in January 2017, it has returned 10.93% annually, compared to the MSCI ACWI's 12.31%. This fund has also underperformed its global benchmark over the longer term. This fund had net assets of $567.1 million with 41 holdings. The portfolio turnover rate was 8%. The top sectors were consumer discretionary at 20.15% and financials at 18.97%. Finally, the Davis Select International ETF. This fund focuses on foreign companies. It also underperformed its benchmark, the MSCI ACWI ex USA, which covers developed and emerging markets excluding the US. The fund returned 1.76%, while the MSCI ACWI ex USA returned 12.11%. Consumer discretionary was a major detractor, underperforming the index sector, and the fund was significantly overweight in this area. Industrials also underperformed significantly. The fund was underweight in energy and information technology, which were the strongest performing sectors. China holdings were also an issue, with an overweight position leading to underperformance. On the upside, information technology strongly outperformed its sector, with Samsung Electronics being the largest contributor. Financials also outperformed. Materials did well, and the fund was underweight in this sector. For the one-year period, the Davis Select International ETF returned 25.75%, well below the MSCI ACWI ex USA's 32.20%. Over 5 years, the ETF returned 4.95% versus the index's 8.37%. Since its inception in March 2018, it has returned 6.05% annually, while the index returned 7.79%. This fund has clearly struggled to keep pace with its international benchmark. This fund had net assets of $278.0 million with 32 holdings. The portfolio turnover was 7%, and advisory fees were $727.9 thousand. The top sectors were consumer discretionary at 28.37% and financials at 20.84%. Let's look at the actual holdings to get a sense of where the money is. For the Davis Select US Equity ETF, we see large positions in Alphabet, Meta Platforms, and Amazon, all in the communication services and consumer discretionary sectors. Financials are heavily represented with holdings in US Bancorp, Wells Fargo, Capital One Financial, and Berkshire Hathaway. Healthcare includes Cigna, CVS Health, and United Health Group. The Davis Select Financial ETF, as expected, is heavily weighted in financials. We see Bank of America, JP Morgan Chase, US Bancorp, and Wells Fargo. It also holds insurance companies like Chubb and Markle Group, alongside capital markets players like Bank of New York Mellon and State Street. The Davis Select Worldwide ETF shows a mix of global and US companies. Alphabet and Meta Platforms appear again alongside companies like Prosus, Sea Limited, and Meituan, indicating significant exposure to Asian markets. Samsung Electronics is a major holding here too. The Davis Select International ETF is also heavily invested in international companies. We see holdings like JD.com Common Naspers, Prosus, and C Limited, again pointing to significant exposure in China and emerging markets. Samsung Electronics and Ping An Insurance are also prominent. Looking at the statements of assets and liabilities, the US equity ETF had total assets over $1.16 billion. The financial ETF had assets around $474 million. The worldwide ETF had assets of about $567 million, and the international ETF had assets of roughly $278 million. The statements of operations revealed the income and expenses. For instance, the US equity ETF generated over $9 million in income, with investment advisory fees at over $2.7 million. The net investment income for the US equity ETF was over $6.1 million. The funds also show significant net realized and unrealized gains or losses. Notably, the US equity ETF had a net realized gain from investments of over $47.5 million and a substantial unrealized appreciation of over $98 million. The international ETF, however, saw a net increase in unrealized depreciation of nearly $16.4 million. The financial highlights give us a per-share view. For the 6 months ending the 30th of April 2026, the Davis Select U.S. equity ETF had a total return of 16.37% on a net asset value basis. The US S&P 500 index return was 6.03%. For the Davis Select Financial ETF, the total return was 7.40%, significantly outperforming the S&P 500 Financials Index's 8.58%. The Davis Select Worldwide ETF saw a 4.62% return versus the MSCI ACWI's 7.75%, and the Davis Select International ETF returned 1.76%, far below the MSCI ACWI ex-USA's 12.11%. So, what does this tell us? The US equity ETF and the financial ETF seem to be holding their own or outperforming their specific benchmarks in the short term. However, the worldwide and international ETFs have significantly underperformed their respective global benchmarks. This suggests that the active management strategy in those international funds might not be as successful in the current market environment compared to simply tracking the index. The US equity ETF's longer-term underperformance of the S&P 500 is also a point to consider for investors. What I'm watching is whether these international funds can turn around their performance, or if a passive approach might have been a better choice for investors seeking broad global exposure. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe. Your support makes these deep dives possible.